All right. What's up, YouTube? Welcome to the Money Room. It's your boy Nam Diesel, founder of the Money Room. And with me, I have, as usual, Tooks B, my co-host. And today we have a topic for you that actually started within the internal Money Room. We're all having a discussion. I'll let Tooks give you guys that topic.
Absolutely. What's going on, guys? What's going on, guys? So we had I don't even know if we should call it an argument, but
A debate.
a debate. Okay, so I think we were pretty much almost somewhat heading in the right direction together. But and I had that sense, where sometimes perspectives is everything, and obviously when you type words, um, it's typically not enough. So pretty much this topic is about, can investments be guaranteed? Okay, and a lot of time you get into investment vehicles, and you end up with an offer, and typically that offer would come with guarantees or whatever. And the statement that I made was very, very simple, and I said,
It's
in
very extreme. A very extreme
it,
statement.
it is extreme because people do experience extreme situations out here, specifically investment vehicles that have guaranteed returns. If they have guaranteed returns on your investment, you need to run. Okay, it's called making a claim, and that was the statement that I made, and that my friend here Namdi was kicking against. Now I don't understand why he's kicking against it, but I think I'm just gonna try to listen to you a little bit.
You
What's your
know, you
point
know.
exactly? Why are you? I mean, explain yourself. Why do you think? I'm coming from a standpoint that life is not guaranteed. That's
No,
number one.
no, 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 no.
No,
I don't. That argument is not even allowed. Obviously, we'll have to use a little common sense here, guys. We have to use a little common sense here because life is not guaranteed. Waking up tomorrow is not guaranteed. Your paycheck is not guaranteed. Nothing is guaranteed. Matter of fact, us completing the show right now is not guaranteed. Come on, we gotta use a little bit of common sense in this. We can't just say, what is guaranteed? Are
all
you
right.
alive right now?
So
You
backstory,
know, do you know
backstory,
if that's guaranteed? Are we here
backstory.
right now? Are we here right now? Do we know that's guaranteed?
No,
Maybe we're in the matrix.
backstory. For example, this gentleman just came 20 minutes late.
Look,
Was it 20 or 25 minutes?
a man's got to eat though.
Wait. 25 minutes late. And my
A man,
point exactly, nothing is guaranteed. Sorry, Instagram are watching me live, but they can't really hear the
look,
person that's having a debate with me, right?
you can.
You just came 25 minutes late, and sorry
That's
for
because
those of you that were
I was
trying to
trying to make a
plug
point.
in.
I'm
No,
trying to make a point today.
he's about to give me an excuse right
I'm
now.
trying to make a point today that you cannot rush greatness. You cannot rush greatness.
Okay, so he
So
just said we cannot rush
that's
greatness. We can't rush greatness. Great. Okay, but that's the point. Now the reason why FTC, SEC, FCC, and all these bodies, the reason why they frown at guarantees is exactly what we're saying, because there's so many moving variables in life, and especially in business, right? That you simply cannot be guaranteeing returns. You can guarantee delivery of your service. You're not exactly guaranteeing it. You're saying I'll give you your money back doesn't mean you're guaranteeing it. You're saying you're going to give your money back. You're not guaranteed that the services will be rendered. And sometimes in efforts to make sales, as salespeople, as marketing experts, we do put that guarantee is a part of the 12 elements of a sales message. You know what I mean? But the point there is that we're going to give you your money back if we don't deliver, if you're not happy. We guarantee satisfaction is different from guaranteeing returns on an investment, specifically returns on investment. You can guarantee whatever you want. You could guarantee your kids that you're going to send them through college. That doesn't mean it's true, by the way.
I have 3 words for you, Tooks. 3 words.
Go ahead.
3 words.
Mhm.
Capital guaranteed investment. Have you ever heard that before?
Capital
Capital
guaranteed investment. Enlighten me.
capital guaranteed investment, or also known as uh protected investment, right? Or capital protected investment. And yeah, I'll be glad to enlighten you, right? Because everyone's saying, oh, you were saying that you can't guarantee an investment, but let's not get too caught up with the word guarantee, and because then
No,
you
you're
go
you're
this,
you're you're, you're caught up on guaranteed.
you're gonna get neither here nor there. Let's use a little common sense, because now if you say nothing's guaranteed, then we could go on forever and ever as far as what's not guaranteed. Now, we're not saying that investment can be guaranteed, because now you're saying if you hear that someone saying, hey, I could guarantee you this, I could guarantee you that, run. It's a Ponzi scheme. This is what your word. You said Ponzi scheme. Ponzi scheme.
Ponzi is if somebody gives an investment vehicle. So
what I'm trying to tell you.
Go ahead, but I will.
You can counter afterwards. Yeah, but what I'm saying that's why I told you capital guaranteed investment, right? Or capital protected investment. This is a thing, and it's done, and they use the word guarantee. If whenever you hear someone say, "Hey, on TV commercials here all the time, blah 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 blah, guaranteed or your money back, blah blah blah, guaranteed or your money back," they'll be getting sued if they were not meeting those guarantees. So what I'm trying to make sure you understand out here is when you use the word guarantee, let's not take it to an extreme, crazy, non-common sense level, because no one could guarantee that while we're here right now. Maybe we're all in the matrix, right? As I said earlier. So let's talk about stuff with common sense. A lot of times on commercials on TV, say this is guaranteed or your money back. Those are not Ponzi schemes. They're actually telling you they're going to guarantee something or their money back. Unless, obviously, there's always fine print. There's always unless. This is guaranteed unless the world ends. Oh, I guarantee you that I'm going to do this unless, guess what? Something, you know what I'm saying? So you can guarantee, and you have fine print. You have clauses. That's what you have clauses for.
Okay, that's why I said backstory earlier. Okay.
Now let me elaborate on what I was referring to earlier. And I'm trying to tell you here that it is a thing, and it is done as practice in finance and business. It's called the capital guaranteed investment. And I'll start with I'll go back to a very basic one, but just when I say capital guaranteed investment, that's me telling you, hey, you want to invest with me? Give me your money. When I give you your money, I could guarantee you that the capital that you invest in, I'm not going to lose it. I'm not going to lose the capital you invest in.
Okay, again, you're talking about capital returns.
No, hold on. I'm going to get there. And it's advanced ones where you can also guarantee returns. And what I'm trying to tell you is, say for example, I think I might have used Apple as an example before, and that's why Apple has a lot of their money in offshore accounts. What Apple does is that they do a lot of borrowing from banks over here, but what do they do? How are they able to borrow such large amounts of money? They have a lot of money stored in escrow accounts overseas. So what they're saying is, hey, give me a loan for blah, blah, blah billion. But I have this to back it up over here. I have maybe even double it backed it up over here in escrow over there. So that's what that really is. So now you're backing up the capital with more capital. So that's a guarantee. And that's what we'll call about guarantee investment.
I think
that money is not meant to be touched. That money is not meant to be touched. Now, let me add another one for you too. Today, me and you are going to put leg in the same trousers.
Don't finish all your points now. Let me talk.
I talk small. I'll give you some talk small.
All right, you're complicating things a little bit more than you need to complicate it. Okay, let me give everybody a little bit backstory. What we're talking about specifically is that the whole craziness with cryptocurrency started like 2 months, 3 months ago, because there was this big wave of awareness, mainstream awareness that happened to the cryptocurrency world. So all kind of investment vehicles started to come out. That's where this argument came from. And USI Tech was a company that got shut down. BitConnect is another company that just got the cease and desist in North Carolina, and is it South Carolina or Texas? Those two states, right? And because that happened, I'm like, if you hear guarantee, the problem with those platforms was that they were guaranteeing 1% return on your money when you lend your money. Okay, they call it lending, cryptocurrency lending. When you lend it, they guarantee 1% return on your investment every day, and then they sell the idea pretty much based on the guaranteed return. Anytime you hear guaranteed return as an investor, especially if you're not dealing with investment banking at the level of Apple investment that's invested in Ireland and things like that. We're not talking about that level at all. I'm talking about a regular person. You hear guaranteed return on your money.
Apple is part of it.
Wait. If you hear that guaranteed return on your money, you need to run. If you go listen to Shark Tank, there's no such thing as guaranteed return. Everyone is taking a risk. Everybody listens to the business idea. They say, yes, I'm willing to go in on this, on a risk. I'm in, I'm out. They understand it's clearly a risk. The idea of guaranteed returns does not exist. And when people use that, they use that typically to sell you something. And that's the only thing that SEC, FCC, FTC, that's what they frown out. Anytime you see a sales message, you will typically see disclaimer all over the place, especially when you're dealing with marketing or marketing to the mass. And that's what I'm talking about specifically.
Now, what I'm talking about, matter of fact, just to throw in that Apple stuff, and what Apple did is a very large scale, but it could be scaled down and it could be applicable to a lot of regular day individuals. Now, other than that, back to Shark Tank, you can't use Shark Tank as an example in this case because the sharks are actually in the position who could actually do that. Not the people who are going there looking for the sharks to invest in their business. Those people who are going over to the sharks to invest in their business are not in a position to do such a thing. You get what I'm saying? They can't guarantee the sharks shit because they're out there looking for a deal. They can't go out there and say, oh, hey, I'll invest in my business and I'll guarantee you. What are you going to guarantee them? They're investing in your business. You can't go over there and guarantee the sharks shit. If anything, the sharks are going to guarantee you that they're going to give you some money. So
no. Returns.
Yes. I'm saying yes.
No.
Because I'm trying to make it very clear to you. They're not in the position to do so. The sharks are taking the risk. They're not
exactly.
Yeah,
I didn't say they give you a guarantee.
I'm saying that picture is not a good picture to paint here for this example because those individuals out there looking for the sharks are not looking for the funds for their business. You know what I'm saying? In this case,
time out. The person that's lending the money.
Hold on. It's not a good example because in this case, the capital is really coming from the sharks.
Exactly.
Right? The sharks are not. Let me be very clear to you. The sharks are actually the big dogs in this case. The ones who have the money. The capital in this case, right?
Who has the money?
It is not the same thing. It's like you trying to invest your money in an investment vehicle, an investment bank, right? You can't. But let me say, make it very clear. An individual, right? An individual cannot compare themselves to where the shark is sitting. A regular day individual, right? That's what I'm saying. That's not a good example because you're flipping it around. In those cases,
I just flip it around. I'm talking about holding the money first.
No, it's not just about holding the money. It's about the sharks in the position of power in those cases.
Not necessarily.
Yeah, necessarily.
We're talking about investments, specifically investments. That's what we're talking about today.
I'm saying that's not a good example because those people who are, I'll tell you why. Those people who are on Shark Tank going over there to look for a deal are not in the position. They're not in a position to guarantee the shark shit. Matter of fact, that they're almost pleading and begging.
That's my point.
Hoping that the sharks will get
not in the position.
That's not your point. So now those people are not in the same position as bigger and larger financial institutions, hedge funds, and people of that sort who could actually guarantee return. They're not in those positions. These are mom and pop businesses who are over there trying to make it, struggling, and maybe they'll get some money from the shark and they can invest. This is different from a hedge fund, different from a financial institution that's well established to guarantee a return. Two different things.
Is BitConnect and US High-Tech one of those? Was Madoff one of those?
So no, we're not talking about BitConnect specifically. We're talking in general.
What about Madoff?
So what? We're not talking about BitConnect specifically. We're not talking about Madoff. We're talking in general. You cannot just say at the end of the day, hey, if you see something is guaranteed, run away. That's wrong because you're gonna make people miss out on opportunities. There are many opportunities out there that people are gonna miss out on because they're gonna be like, oh, every time I see something that's guaranteed, I should run away. And I'll tell you why. If you see something that's guaranteed, don't run away. Read the fine print. See how they're guaranteeing it. See what they're doing to guarantee it, and the different things to do about it. Guess what? There's terms. When I say there's terms, it's like usually those kind of contracts have a year or 2 years, a certain number of years before it expires. Those are the kind of things that you have to look at. No one is guaranteed something indefinitely because that might be a red flag. But they might guarantee it for a certain time period. That's true that these people are really serious because it will be insane and stupid to guarantee something indefinitely because you know what's going to happen with time. But you could hedge and say, okay, within a certain amount of time, 2 years, 3 years, 4 years, or a couple of months, this is what I'm going to guarantee you. That kind of guarantee, if you're a customer or someone who's looking to invest, you could see that I'm like, okay, these are the kind of things you should look out for. And now we might make a decision of whether to invest with such a person or such an institution or not. So those are the red flags you look out for. I will not tell you, though, that if you see an institution tell you they guarantee returns, run away because that might be a good institution to invest in. You might be missing out on some returns. So now, let me break it down a little further, right? You made your point.
Why? Why? Let me make your points.
Hold on. Not just to counter your point. Now,
no, it didn't.
You know, it did. It did totally. I just totally analyzed your point.
I'm hearing you. Go for it. I'm hearing you.
But now, the next thing I'm trying to say over here is, now let me give you. Now we made it clear about as far as what we might guarantee, and we have to use a little bit of common sense. Life is not guaranteed. You can keep going on and on. But now, what I'm trying to say here is there are ways to do this. Now let's talk about T-bonds. T-bonds are treasury bonds.
That's too deep, bro. That's too deep, bro.
It's too deep, but hey, I gotta go. I'm gonna go deep and I'm gonna go wide. Now watch. What I'm trying to tell you is this: you have T bonds.
It's simple.
I'm gonna keep it simple. I'm gonna go deep and I'm gonna go wide. All right, let's go deep first. So now T bonds, for those who don't know, are treasury bonds, and those are what when you hear people talk about risk-free rate and stuff of that sort. Those are what the bonds guarantee, like the interest rates. So the interest rates are so low and blah blah blah. The T bonds.
Who sells the T bonds?
Hold on.
Who sells T bonds?
Treasury T bonds. All right.
Treasury?
Hold on. Hold on. Let me make my point. You're trying to distract me from making my point. Okay, I see what you're doing. What I'm trying to say here is the risk-free rate. Have you heard of that term, risk-free rate? For those guys who maybe this might be a little bit too deep for you guys, but I'll explain.
Risk-free does not make guarantee, bro.
Hold on. When I say risk-free rate, that means saying this is how much money you're gonna put in here, and you have no risk. So, in other words, nobody in any financial institution or anybody in the world knows that no matter what, there's always some kind of risk. So that's why you can't say guarantee. You have to use guarantee with common sense. So when I say the risk-free rate is the amount of money that the interest rate that you're gonna get return on.
Right.
You put your money in a T-bond or something of that sort, and you're gonna get paid very, very, very little money. As a matter of fact, you might even lose money basically compared to inflation and other stuff going on around you. But that's the risk-free rate. So now the fact that it's a risk-free rate shows you that you can almost say there's a guarantee. As a matter of fact, let's talk about your savings account, right? Your savings account is a freaking investment vehicle. Is your money saved there? Is the money guaranteed there? Even if the money is not guaranteed there, then there's no point in having a discussion.
So you're taking me completely out of context. Okay. So again, that's why I wanted to give those backstories. Anytime a friend, a family show up to your table and they said, hey, I got this investment vehicle, I'm about to sell you this thing, and the return on your investment is going to be, there's a lot that goes into when I tell you be careful when you hear guaranteed. There's a lot that goes into it, but it's not that much, okay? Anytime somebody tell you generate 1% return on investment every day on your money, guaranteed, you need to run, bro. This is as simple as that. You need to run. Again, something always give. Okay, I'm gonna do a live session tomorrow where
they did not guarantee it though. That's one thing I tell you. They did not guarantee it.
They did. It's in the statements. Go check the statements. It's on BitConnect. It's on USI Tech. It's guaranteed 1% return on your lending, whatever you lend every day. If they already shut down their website, which they did, you can see screenshots of those websites, and they actually did.
It's still trading actually.
It's too trading.
Let's not
get into that. Specifically lending. Okay, you're messing with cryptocurrency. You're messing with if you're messing with cryptocurrency, you're messing with bitcoins. You want to buy bitcoins. The lending platforms. Be careful with the lending platforms. I personally, when I hear lending and you get guaranteed on your money, I don't play with that. Period. I just don't want to. I don't want to mess with that. You know what I mean? It's very simple. Now, can you make money from it? Yes, you can make money from it. But the most people that are making money from those platforms are the people referring people to those platforms, the people that are making money from affiliates. Now, you're talking about Goldman Sachs and all these big investment banks. You cannot compare that to companies that have anonymous people owning them, that we don't know where they came from. They came overnight because of the cryptocurrency buzz and everything. That's pretty much what happened. And especially in the volatile, uncharted territory, right? You cannot put your money into vehicles where they guarantee you money, because guarantee you money means you're guaranteed to lose your life savings. That's what that means.
I got something for you.
Yeah.
I got something for you, right? Let's talk about Bitcoin, like DAB, all that kind of stuff. And look, first off, if you're in the cryptocurrency space, we all know it's a wild, wild west. It's risky. Which one you can afford to lose? That's rule number one. So once you do that, yes.
No, we're talking about guaranteed investment.
No, I'm going to get there. Hold on.
All right.
In cryptocurrency, it's a wild, wild west. Put whatever you can afford to lose, right? First and foremost. Now, secondly, even within the cryptocurrency, people could trade the cryptocurrency and buy the coins. And now we'll talk about lending platforms. Lending platforms is still a part of cryptocurrency. BitConnect had their coins. They also have their lending platforms. DApp has their coins. They also have their lending platform. But now, I'm going to show you how this. Check this out. You're saying that if you had guaranteed or stay away from lending platforms, not necessarily. I'll tell you this.
What do you mean not necessarily? That's my opinion.
I'll tell you what I'm opinion.
I've seen way too many companies shut down.
I'll tell you why. I'll tell you why this is. Okay, I'll give my opinion too. The reason why I disagree with that strongly is DApp, for example, which a lot of people fear is going to be like BitConnect, right? If you had bought the DApp coin and held on to it till now.
Oh, you're talking about DAV. You're talking about DAV right now.
We're talking about lending in general, right? So I'm gonna use that example.
Lending in general, right?
Yeah. So it's in crypto lending. So if you held on to DAV, the coin, versus actually using the lending platform, if you held on to the coin, actually, and that's the crypto world traditionally, as most people know it, you have lost money. If you're on the lending platform, you would have made money. Okay, you have made more money in the lending platform than if you're in the currency itself. And now the reason for that is because of this same thing. I'm gonna say, oh, they're paying the guarantee returns. It's because of those guarantee returns that you actually make money. As a matter of fact,
can you do me a favor?
I've made money on DAV lending too. So
making money in any period of time does not define if it's Ponzi scheme or not. People make money from Ponzi scheme all the time. That's not what defines it. And
that's what I said too. So my point is that even my point from this statement though is that the lending platform was actually safer and a better vehicle than if you invested in the coin itself, because the coin has dropped to nothing, but the lending platform is still yielding returns. You see what I'm saying? You see what I'm saying,
bro? Let me tell everybody that's listening something. Okay, let me just talk a little bit here, maybe for 2 minutes. Okay, let me just tell you something. Business in general, investments, business in general, and what we all know as economy, okay, is essentially people exchanging value. Okay, it's really that. No value is like energy. It's neither created nor destroyed. Anytime you lose money, it went into the hands of somebody else. Okay, now what the market sees as the value in the marketplace, the value of it can grow up and down depending on demand and supply. And just never forget that in everything you do. Anytime somebody says Big Connect is going to give us our money back, you should say how? It's not possible. They lost the money. Okay, they have the money in the marketplace and they literally just killed the value of the brand value. That's going to show up on the BCC. It's very simple like that. And that's the more reason why I tell you, when somebody says guaranteed, if something is guaranteed, especially forget life in business, right? Why would all of us not be in there and putting our money in there? Well, we won't be there, okay? But a lot of people will be there, and the more people come into it, something happens called the slippage, okay? And that's why scaling, when you're scaling a business, it's not always, hey, 2 times 2 is going to be 4 now all of a sudden. Because of slippage, when you start applying big numbers, it's not going to be the same thing. Things are going to shift, okay? There's going to be a shift in the way the mechanism, everything, the way the value moves from one person to the other in the marketplace is going to shift, and that equation is not going to be 2 times 2. There's going to be more to that mathematical calculation right there. And that's why I tell you, we got to keep this basic. We're talking about to regular people right now. When you have $1 million, right, you're going to start playing at a different level entirely, where you may be talking to people that say, yes, a certain amount of your money is guaranteed, blah, blah, blah. Yeah, that conversation will exist at that point in time. But I'm talking about the type of person, the average type of person that BitConnect, USI Tech, the Bitcoin's mainstream awareness just attracted in the past 60 to 90 days. I'm talking about those people right now. When you see guaranteed on your money, you need to run. And I mean that. When you have $1 million and you start go play with a certain type of brokers at a different level, that's not what I'm talking about. As a matter of fact, that's a conversation I'm not willing to have right now. I'm not willing to have that conversation on this phone either.
Let me ask you this. What about guaranteed bothers you? Say, for example, say Tooks.
I was going to say define Ponzi scheme. Define Ponzi scheme.
I'm talking about guaranteed specifically. Like if I say something is guaranteed, I want you to know what I mean by it's guaranteed. Now, let me give an example of a structure I could use, right? Say, for example, I'm like, Tooks, I have an investment for you, right? Mm-hmm. And I'm going to guarantee you 2% returns for a year. You know, and your question should be how? You know, you might have your concerns, 2% returns, and that's pretty low, right? For it's low, right?
2% for a year? We're not gonna have the conversation.
Exactly, and that's the point, and that's the point. That's the point I'm trying to get to. People only start to worry about guaranteed returns if they start.
Wait.
Hold on. People only get to the point where they start to worry about guaranteed returns. Really, it bothers them more when the returns are actually higher. When the returns are higher, then they're like,
but it is high. What do you think 1% daily compounded over 1 year means?
No. I'm talking about for a whole year. First of all, I'm
1% compounded over 1. What do you think that is?
We're saying 2 different things right now, right? Okay. I know 1% over a whole year is high. I'm talking about 2% annual return, right? In this example, I'll give you 2% annual return.
Yeah,
that's low.
Wells Fargo.
But hold on. That's guaranteed. But people don't give a shit there because
that's not an investment.
It is an investment.
In this context, it's not. In this context, wait. Semantics, okay? Wait. I'm just telling you right now that based on this conversation, in this context, we got to stay in context, bro. We got to stay in context.
You tell me why it's not an investment vehicle. It is.
We got to stay in context.
We are very.
Everybody, let me just say this right now. Your savings, right? Your savings account is not an investment because number one, savings account is losing money when you factor in inflation. Okay,
I already said that. Money. But it's still an investment vehicle because you can either be in a savings account or you could be under your mattress.
Great. For the sake of this conversation, I'm not talking about those investment vehicles. I'm talking about.
So now you're ruling out certain kind of investment vehicles then.
I'm gonna.
So you know that? Do you know that contradicts your statement earlier?
That when it comes to the chat group, you are probably going to attempt to take me out of context. Didn't I say that?
No. That's not what you said. And now you're contradicting what you said in the chat room. I'm what you said at the beginning of this conversation.
Listen.
Hold on. Let me just say it. We'll go back one at a time, right? You're contradicting what you said earlier in this conversation. And you're contradicting what you said in the chat room.
Stop talking.
Yeah,
he's gonna get smacked on this live right now.
Can I finish?
All right, go.
Can I finish? I'm saying you're contradicting what you're saying.
Because
what you said earlier, that when it comes to investment vehicles, that there's no way you can guarantee anything. You should run away. And now all of a sudden, I brought another investment vehicle that has a lower return. And because the return is so low, you don't consider that. But guess what? That's exactly the point.
Would you like to know why?
I know exactly why. Because the return is low, so you don't care. But once it's higher, people start getting scared. Like, how can they make so much money?
You already answered the question. Let's move on to the context that we're talking in.
But that's the context. The context was that you said that the company is not an investment vehicle that can be guaranteed. If it's guaranteed, run.
You took me out of context. Just say yes, and then we can move on to the next step in the conversation.
No, because I didn't take you out of context.
Because again, a savings account, everybody, it's not an investment vehicle. Okay.
You never said
it's
that.
Not. Huh?
You never said except for. But you made a blanket statement.
I just said a savings account is not an investment vehicle.
No. But earlier he said it is, but we're not talking about that. Let's not.
Because that was my way of trying to get you past this right now, so we can get.
But dude, I'll tell you. I'm asking you this. Are you trying to tell me a treasury bond is not an investment vehicle?
A treasury bond is not an investment vehicle. For this context, no, it's not.
It is. So you make.
And I asked you a question earlier. I said, who sells the treasury bonds?
It sounds to me like you're making up the context.
Who sells them? Who sells? See, I don't know enough about treasury.
I told you the treasury. The treasury is back.
Right. I don't know enough about them, but who sells them?
I'm telling you right now. Can I answer to you?
Please go so that they can learn.
The treasury. T-bond stands for treasury bonds, and it's backed by the U.S. government. So the only way a treasury bond should really fail is if there's sovereign risk, and by sovereign risk I mean country risk. If the U.S. economy itself,
all right. So
hold on. If the U.S. economy itself should default, that's the only way a T-bond should fail. So if you're scared of betting on a T-bond, you're pretty much saying that you think the U.S. economy is going to default. So that's what that is.
Okay. So here's why that doesn't fit into this context. Okay.
It does.
We're talking about I started with SEC, FCC, and FTC. These government agencies frowning at private companies that are offering you a product. Forget even investment vehicles. If they offer you a product, especially educational products, are considered high risk products. Okay, and they are guaranteeing you return on your investment. Okay, that means I'm saying you're gonna make 15% back on your money. It's guaranteed. The FTC, FCC, SEC for securities, right? They frown at that. There's a specific reason why they frown at that. This conversation started from a few weeks ago.
Can I read what you said?
That they frown at it.
Can I read what you said? He said guaranteed returns on investments equals scam. It's a scam.
Yes, and I mean
what? Guaranteed returns. Guaranteed returns. So now all of a sudden you talk about context and you're picking and choosing what kind of vehicle.
I mean, you're stuck on that. You want me to agree with you that there's some exceptions to the rule? There's exceptions to every rule in life.
Okay, so say that then, right? So now
there's exceptions to every rules in life. Let's stay in context.
Okay, good. So no, because you didn't say that before. So now you made it clear that there's certain exceptions, right? As far as from your perspective. So now you're making it clear to everybody watching that what you're saying is that there are some other vehicles that you think the returns are guaranteed. So that statement doesn't apply for all instruments. Cool.
Yes.
Let's get
Today,
okay.
right now, I'm talking specifically about aggressive promotion of investments to you that guarantees return on your investment. I'm talking specifically about aggressive. That's where this conversation started from. We did not start from savings account from Wells Fargo. We did
different.
not.
No, but you made a blanket statement, and what address was your blanket statement? Was
And
wrong.
you chose to go for the blanket statement. You could have figured that out on your own now.
No. That's first and foremost. I'm getting somewhere. I'm not even there yet, bro. I'm not even there yet. I'm getting somewhere. So now you've admitted to that is not the same for across the board. There's some exceptions here and there, which is obvious. And I have you admit that. Okay, no, but you made a blanket statement. So now
henceforth on the money room, anytime I make statements, there's exceptions to every rule in life.
Nah. This was the blanket statement, and you kept going on and I was saying, dude, that sometimes. So now the point I'm trying to make. Let's move on. Now the point I'm trying to make is people like you, for example, only start to get scared when they see, oh, you guarantee the returns when it's higher. When it's 1% a year, they're like, oh yeah, that's fine. 2% a year, oh, that's fine. When it gets to 5%,
so let me ask you a question.
Hold on. When they start getting to double digits, start getting higher, then they start getting a little more scared. Okay, what's going on here? But the thing is, there are ways to guarantee certain investments. Okay, the only way people get so scared when all of a sudden is when the returns get higher. So why you give us shit so much? Maybe the returns are high.
So let me talk a little bit. The only reason why aggressive promoters like that will promote something with guaranteed returns is number one, because it's usually high. It's usually a high return on the investment that they will promote like that. Okay, something like 1% every day, compounding out to about 3,700% return on your investment at the end of 1 year. Okay, it's typically when it's aggressive. It's typically when it's when the rates are aggressive and they are trying to get people on board a scheme. That's why I use the word Ponzi scheme. So let me define what Ponzi scheme is for you. Okay, I may not get it down exactly how they put it on Wikipedia, but it means the only ways to keep the thing sustainable is by bringing new people in. That means the product itself cannot sustainably maintain its value. Okay, that's why they call it Ponzi scheme or pyramid scheme, right? So that's where that term comes from. And a lot of this platform, when somebody gives you an aggressive return on investment and they promise and they guarantee it, you cannot that cannot be sustained. That guarantee is unsustainable. Excuse me. Okay, that's the whole point of my statement. That's why I tell people to avoid it. See, you could come in, you could make your own quick buck and get out, but we're not structured that way as human beings. Okay, if you make some good returns, you probably want to stay in a little bit longer and stay in a little bit longer and stay a little bit longer. As long as you're a human being, your emotions is going to be tapped into the situation, no matter how rich you think you are, and you're gonna get beat at some point. Somebody you know that you brought in, that you've built relationship with, is gonna get burnt. And that's why I tell people, like, anytime you see guaranteed returns, I'm talking about, again, my blanket statement, we've removed the blanket. Okay,
usually it's not gone yet. It's not gone yet. And again, to add to that point, every smart investor knows when to get out, right? Every smart investor knows,
we're talking about the market. Let's talk about the market.
But hold on. That blanket statement is not done yet, because now you're saying, oh, when it comes to risk-free rate and treasury bonds, it doesn't apply to that. When it comes to savings account, it doesn't apply to that. When it comes to this, it applies to it. But hold on. Hold on. That's what you just said. You said that it doesn't. Your statement doesn't apply to
the reason why we're having this conversation.
Wait. Let's be clear.
Yeah, I'm going to talk about that right now. The reason why we're having this conversation.
Does your statement apply to treasury bonds or not?
See, again,
it does not.
Treasury bonds.
I thought we're on the same page.
Tell me if I'm on the same page. For what I understand, treasury bonds are sold by municipalities and governments and backed by them. You see that they're sold by them or backed by them, right?
Guess what?
Right? Is that what we're talking about here?
It is an investment vehicle.
And typically, treasury bonds are used to hedge portfolios. Am I correct about this here? There's a reason why they use it to hedge portfolios.
You just said portfolio. If you put your treasury bond in a portfolio, it's part of the investment vehicle. Your portfolio is an investment. What do you say?
Okay, now you let me finish. Okay, Okay, again, I got to bring you back into my context, since I was off with my context before. I admit I was off with my context, and I probably miscommunicated, and that's why, and that's why we did this, and that's why I want everybody, because it's very important that everybody learn what I'm trying to say and not just take it and run, because you're gonna miss out on opportunities. Granted, yes, you're gonna miss out on opportunities, but when somebody is granting and telling you you're gonna make anything above 10% return on your money.
That's what I was waiting for. Anything
above 10%. on
You
your
put a threshold
money,
now.
and
Okay.
they're telling you that, especially in the crypto world, and they're telling you buy this stuff but lend it out into the system to more people that are coming into the system. My brain automatically at that point will pretty much freeze. I would just be like, okay, that doesn't sound like it's sustainable. Okay, I have to do like an elaborate big mathematical equation to figure out if this is sustainable or not. I would simply bow out. I'll be out like a shark. Simply, that's what I would do personally. And I would not play with, there's no, people talk all the time about, oh, just put money that you're willing to lose. There's no such thing as money I'm willing to lose in my world, personally. Okay. So I'm always taking a risk, but there's no such money. So I'm always taking it. I will take assess risk, but there's no such thing as, oh, money, just throw it at it. Oh, you can make a quick buck and before you get it. I don't believe in that personally. Some people believe in it. Kudos to them. Granted, no problem. Okay. But again, I'm going to put that right there right now. Anything. Actually, 10% too high. 5%. Somebody is promising you 5%. Anybody promising you 5% on return on your investment, guaranteed, and they say guaranteed. And it's not treasury bond. Wait, it's not treasury bond.
Hold on, I gotta jump in here because that's exactly what I'm waiting for. Let me finish. I'll let you finish. Let me say something.
I will mute your mic right now if you don't let me finish. Let me finish.
I'll close this laptop. Hold on.
Let me finish.
Just one point, because we're gonna
let me finish.
No, you're gonna finish.
Instagram is fighting. They want you to let me finish.
Tooks, yeah, hold on. 1 point. That's what I'm going to say the whole time. Because so far you've been wishy-washy. For a lot of better words, you've been wishy-washy. Like, oh, if it's this,
but the point I'm making is very straightforward to people that are listening.
Hold on.
That means anytime somebody is promising you money, guaranteed returns on your investment, and you don't understand what it is, and it's not treasury bond, it's not a savings account, it's not a CD from Wells Fargo and Bank of America, you need to run. Especially if you don't know who owns the company. And this company, BitConnect, was owned by Anonymous. Nobody knows who owns them. Come on. I know what I'm talking about here. We got to stay in context. Words, okay? There's a lot of companies out there that have done. If you know the network marketing world, things like this happen all the time, and it's typically you can pretty much see it from afar. After a while, you can smell it from afar, and typically they would say, oh, it's the affiliates that are lying. It's affiliates that are guaranteed. But when you go on their website, you see right there it says guaranteed.
Are you done?
And by the way, you know that they're going to shut down the company usually.
All right, I'm talking now. So now this is what I'm saying.
Grab the floor.
Right? Before you've been back and forth. You've been too wishy-washy for me. That's why you're like, oh, if it's treasury bond, I want you to.
I got a thumbs up here for you. I got a thumbs up here
for me. Yeah. So I want you to be very specific. You're too. Oh, if it's treasury bonds, no. If
this is more of an art than it's a science, so I can't really be specific.
Hold on. But you just finally got there. And the thing is, 1 second you said 5%. The next second you say, oh, 10%. Then 5%.
I went back from 10 to 5% one time. I went to 10. Now I'm back to 5.
Exactly.
If I promise you more than 5% of your money guaranteed.
Yes. And let me finish what I'm saying.
It needs to involve Wells Fargo savings account, treasury bonds.
What I'm trying to say is
I think that's about it.
What I'm saying that's wishy-washy. Where you get 5% from? You pulled out your ass. You just pulled 5% out your
absolutely. 5%. So let me explain to everybody.
No. Oh, hold on.
What that means. This is more. Let me finish. And it comes from experience.
Hold on. Let me finish. Let me finish because if it's more art than a science that comes from experience, I don't know why you went from 10 to 5 so quickly. My point is that you're not.
I'm being conservative. I'm being extra conservative.
No. Because it means that there's no specific to this. It's just your opinion. It's just what you're thinking of.
That's where risk assessment comes in.
This is what you're thinking of. It means that this is
that reason.
It means that this is what you're just thinking of in the spur of the moment. One minute you said 10%. One minute you said 5%.
No. Hold on. Remember, I made a blanket statement. Eventually, I said.
Let me finish my point. Let me finish. I'll let you go. Can I finish? Okay. Yeah. Let me finish. So what I'm saying is, before you made a blanket statement, and now you're
repeating it. You're repeating it.
Can I finish?
Oh, yeah, go.
You made a blanket statement, and you retracted that statement finally. And I said, okay, you know what? Some of these are right. Some of them don't apply. Blah blah blah. So you finally let that one go. Now after that, now you want to start getting a little better. You still went a little bit wishy-washy. Oh, you say, 10%, anything above 10%. Then it's 5%. My point is that's a lot of wishy-washiness. You can't tell people 10% or just tell people 5%.
Okay,
you have to analyze stuff on a case-by-case basis. That's what I say. Yeah, look at on a case by case.
I hear you.
Hold on. You don't hear me. Let me finish. You have to analyze stuff on a case by case basis because you can't say 5% one time, 10% one time. As a matter of fact, I might invest in a 10% one over a 5% one in a certain period. And can you hear me?
I can hear you. Okay. None of this should be ever guaranteed.
Hold on.
I don't care how much it is.
That's fine. But my point is, it should be analyzed on a case by case basis, and that's what everyone out there to learn. If you, I mentioned some red flags for you. If someone guarantees something, do not dismiss it right away. Find out what they do, what's their method, what's their strategy, what their investment vehicles, what do they use. Now, hold on, you can disagree, but let me finish.
Yeah.
What are they using? If they give you a certain time period, like 1 year, 2 years, a couple of months, that's a good thing because they give you a guarantee within a certain time period. So that's a good thing. But if you hear, oh, something's guaranteed, does not mean you should throw that away because you could missing out an opportunity. And now to go back, I don't want to give people blanket statements or like, oh, 5%, 10%. I can tell you, if I use that, I'll be very clear and tell you that's an estimate, but you can't just say 5% or 10%. But as a matter of fact, if I'm investing in somebody and somebody going to guarantee me 10% return, and that person told me, oh, I don't know, but I might be able to do 5%, and I'll look at both strategies. If the person that investing guarantee me 10% return, and I look at the strategy versus the person who's investing 5% return, I may very well invest in the person who's guaranteeing me 10% return and not dismiss him, even though it's higher than 5%. And the reason for that is because the strategy, what are they using? They have collateral to back it up? Do they have escrow accounts? Is there an asset? Is it real estate? What kind of investments are you doing, right? And now the reason why I'm trying to tell you this is, remember I told you about earlier, the first thing I mentioned, I gave you those 3 words, right? And I want you to be very clear that there are hedge funds and funds who do this stuff. And what they do is that they buy a bond. If they want to guarantee you something, they'll buy a bond to cover that.
Right.
So
that was what I defined as taking me out of context.
No. Hold on. That's not
conversation we're having before that.
This is not one of that. This is not one of that. Let me give an example right now. I'll tell you how I could do it for you. Right? If you don't believe in this strategy, I'll show you how. If I was your hedge fund, how I could even do that. And now the way I'll do that is very simple.
No, you just explained that.
No, I didn't explain that yet. I did not explain that yet. Hold on. That's because you're not listening. I did not explain that yet. What I'm trying to say is this. Say, for example, you want to invest. I'm like, sure, Tooks, come here, you could come invest. But how am I going to guarantee you a return? Right? You go to a store and say, hey, buy one, get one free. Guess what? They give you something for free, essentially, right? So if you come and invest with me, right? Buy one, get one free. I'm giving you a store. You go somewhere, buy one, or they give you a bonus, or they give you gifts. Sometimes they give you gift cards. Sometimes they give you stuff just because they're feeling generous and they hope that they're going to buy you long term. You buy you as a customer long term. So they put in money up front so they could get something in return. That is what investment companies do sometimes. So say, for example, someone comes and they say, oh, I want to invest, so they give me 100,000. I could give them a 10,000 bonus on that. I could make that 100,000 110,000. Now, what does that mean? I'm giving that's a free money I'm giving to them, really. But guess what? That's a 10% return. That's me giving them money, but that's 10% return. But it's guaranteed just for the first year, right? So for every 100,000 that I get, I could put 10,000 of my own money into that person's investment, which is guaranteed them the first year of return. Do you see what I'm saying? And that's how you can also do that. All right. So there are ways to do it. There are ways to, and I just showed you a simple one. Example. Okay. So give me. You want to invest? You give me 100,000. I have like 10 investors, right? Say you're one of them. You give me 100,000, and I say, okay, for every investor that give me 100,000, I'm going to give them 10,000 into their portfolio for the first year. I just guaranteed you 10%. Have I not? Okay, exactly. Great. Done. End of story.
Are you done?
Yes, I'm done, and I hope that sounds good.
Perfect. So you gave I don't know about 4 examples here. Buy one, get one free. That's not investment. That's not return on investment. That's number one. So I cancel that out automatically. Collateral. Okay, using collateral to edge people's portfolio and things like that. We're not talking about that level again. I was talking about a certain context. We're talking about companies that come out of nowhere, selling bitcoins, tokens, and things like that, and taking people's bitcoins and in exchange for tokens that they don't know what that is, and they are guaranteed return on their investment. That's what I'm talking about. So again, that's not comparable. Out of context, out of the window. Free money.
Are you serious?
Let me finish. Free money.
What happened to the 5 and 10%? What happened to the 5 and 10%?
Free. I'm going to go back there. So 5%. I'm going to address that. Before your context applies.
Before the threshold for
your context. Now. I didn't cut you out now.
You said 5% was your context threshold. Now all of a sudden it's not 5% anymore.
No, wait. What's that about? I will get to that. Let me go in this order that you went. Okay. Free money. Okay. Folks, in life, there's no such thing as free money. Something is always given. That's about that. Okay, something's always given. And again, when you're about to invest your money, he's absolutely right. You're absolutely right that People can hedge funds. People can find ways to guarantee stuff. Okay, people can be so established, and they have that kind of relationship where they give you their money in exchange for certain. Sure, I'm talking about
That's
this
my point.
mass. I am talking about this mass awareness of complete strangers, companies that have anonymous owning them, offering you aggressive returns on your money and guaranteeing it, guaranteeing specifically return. You need to run. My statement still stands. It's not even that much of a blanket. I'm going to go to the next one. So ROI is what I'm talking about. Let's talk about my 5 and 10%. The reason I'm going to tell you the reason why I went from 15 to 10 to 5. Okay. Number one, see, I just admitted that, right? Number one reason why
I'm happy. I'm happy you are. Finally.
Number one reason why I just did that was because I made that blanket statement in a different context. And this engineer over here, he thinks he's the one that's engineer. He wants to force me into a number. This is more of a heart than is a science. Okay. It comes from experience. What I'm talking about comes from experience. You see companies shut down all the time. You just want to make sure you are assessing your risk. You can take risk. You want to make sure you're assessing your risk. So that's why I make that blanket statement. If somebody gives me a guaranteed return, promise me a guaranteed return, it's a red flag. That's really essentially what I am saying. It's a red flag when somebody gives me a guarantee. Now, red flag doesn't mean you stop. It just means shine your eyes. Okay, that's what that means.
Now you get in there. Now you get in there.
All right, wait.
Now you get in there.
So I went, when you forced me, I said 15% because I'm thinking real estate. You know, we raise money with 15% and tell people they're going to make 15% of their money, but we also put a disclaimer on their form that, hey, if shit goes wrong with this real estate deal, your money is done, right? We also put a disclaimer. That's the reverse and negating that guarantee, by the way, right? That's where my mind when I said 15 and then I said 10 because I wanted to be a little bit more conservative. And then when I thought about it, I'm like, wait, no, 5%. Okay, 5%. Anytime somebody is offering you anything above 5% and they say it's guaranteed, right? Just like you just educated us here today, expecting to hear something like, oh yeah, you can take my house. Oh yeah, treasury bond is part of the portfolio, right? Oh yeah, Wells Fargo savings account and CDs is also part of it, right? So your guarantee, we're always going to be safe. You want to hear certain things like that, but chances are that's already a red flag that you shouldn't even get into the conversation, especially if it's an anonymous company that's trying to get you lending your hard-earned Bitcoins in exchange for guaranteed returns. It will go for a while. Trust me, Ponzi schemes go for a while. They do. They run for a while. And some people pull some real nice money out of it. Like all those guys right now, they've put some money into Bitcoins in exchange for BitConnect coins for some people. And now they're giving people their money in the form of BitConnect. And that thing just tanked in value. They know what they're doing. This is all a scam from the beginning. From the beginning, they knew exactly what they were doing. Okay. And that's why I tell people, be careful. Keep it safe. Yes, you can get aggressive, but with aggressiveness, I think aggressiveness should always come with a certain level of education in investment. Okay, that means you've built relationship with the people you investing money with, to not complete strangers. You know, that means you build some relationship as well too. Education, relationship before you go any aggressive. And then please be clear that when you go aggressive, your money can evaporate overnight. But at least you feel more confident about what you're doing and not just in hopes. Go on YouTube right now. There's tons of video of people lamenting losing their life savings, 30 grand, 100 grand.
Well,
those are regular people. They're not necessarily dumb. They're just human beings. They're not necessarily dumb.
Well, some of them are dumb, and that goes to back to the whole point of before of, hey, put what you're willing to risk. Don't put your whole life savings. Matter of fact, it's tell you this right from the jump. Everyone knows
There's no such thing. I said that earlier.
Don't put all your eggs in one basket. Like, come on. Some of it's common sense. Some of it's just common sense. So if you went and put your life savings in BitConnect, you're a dumbass. All right, you're a fucking dumbass. I'll tell you that much. So yeah. So don't.
Well, you could say that. You could say that again, you know. But
yeah.
I'm also
thinking for them, but they're stupid. All right, it sucks for them, but that was a stupid move. Now,
what do you think about BitConnect? What do you think about? What is your final say on BitConnect? Because I gotta go in 5 minutes. What's your final say on BitConnect and lending platforms when it comes to the cryptocurrency world in general?
I think that's in hindsight. I think the whole BitConnect thing has set a bad light on other lending platforms. Some other lending platforms might not have been structured like BitConnect, but hindsight is 2020. Now BitConnect has crashed everyone said, "Oh yeah, Bitcoin is scared." I know. Yeah,
but I've seen companies crash because of the same reason.
Now it's happened. Now everybody's like, "Oh, I knew." Okay, you knew, but you don't want to say anything, right? But when it happens, everyone can always talk and say,
"Okay, why are you and Kenny saying that?" And I've mentioned this before in the past.
Hold on. Let me finish. So now my point is, when in this whole conversation, when it comes to something being guaranteed or whatever, my whole point from the jump is stuff can be guaranteed. So don't lose every opportunity. Don't run away from something's guaranteed. Investigate and find out why is it guaranteed? How is it guaranteed? What are they using? You know.
Well, I have a question for you.
Hold on. I'll get to that question. I gotta conclude this. So yeah, you have to investigate. Find out what kind of investment vehicles are they using. How they guaranteeing it. Say for example, I say, okay, if you invest 100,000 with me, I'm going to guarantee you 10%. Or how are you going to do it? Guess what? I'll tell you. I have money set aside and escrow for this purpose.
So are you saying BitConnect did not explain this to people?
So that's one. Now BitConnect on the other hand, right? And another lending platform.
Well, let's talk about DAV. You're more familiar with DAV. Are you saying they're not explaining that to people?
We'll get to
make that happen.
Hold on. What I'm trying to say is there are actually ways that these platforms like DAV, BitConnect, other people who do not have that much history could have done this, right? First off, people made millions. I'll tell you. Hold on. Can I tell you? I'll tell you what happened. How I think it went wrong. People made millions and millions of dollars on Bitcoin, right? So say people made 20 million here, 100 million here, whatever. They put their money together and like say, "Oh, let's form a new coin. Let's form BitConnect. Let's do this," right? So now that money that they had. So I'm not saying that this was the case with these guys because some people could be trying to scheme from the jump. But some people might actually have a good intent.
I'm telling you now.
No. This is hindsight. So we know now, right? Now it's easy for everyone to say, "Yeah, I know BitConnect."
No. I knew. I knew.
No.
Let me be clear about something. Wait.
Let me finish my point, man.
No. Let me be clear. You cut me out earlier. The reason why I knew.
Back to BitConnect. BitConnect is different from that.
The reason why I know. The only reason why I didn't exactly that, right?
The structure could be different. So say people make $100 million in Bitcoin, they make 20 million in Bitcoin, they put that money together. They could actually, if they want to do it the right way, they can actually use that money, or they could try to, because Bitcoin has dropped.
Wait, you're muted now. Okay, wait. Slow down. Slow down.
They could have used that money to back the investments of other people. They can use that money to back the investments of people.
They can't. That's where you're missing the point again.
No, hold on.
Their plan.
I'm not saying that's the plan of BitConnect, but I'm trying to say there's a way that could have
that. So let's stay in context. They wouldn't do that.
I'm talking about lending platforms in general right now, right? That's
they were not a lending platform. They were a crypto lending platform. That's different.
Oh my gosh.
There's a difference between lending platform and crypto lending platforms, okay? Crypto is a completely new animal.
BitConnect is a crypto lending platform. Right now, we're talking about crypto lending platforms, period. So I don't know what you're talking about.
Exactly. So
that's what I'm talking about. So what I'm saying here is this. No, it's not sustainable. Who knows? What I'm saying here is this.
I just told you that.
You did not know that. So now what I'm saying.
I know.
Hindsight is 2020.
I can better explain all this, right?
Anybody can look back. Anybody can look back and say, "Oh, I know." I can say I know too. You look sketchy to me, right? But anybody can say, if you had a video saying you knew before,
it's not sustainable, bro.
So anyway, my point is this. If it was backed up, right, by say $100 million, a couple $100 million, and they started slow, they're not just taking everybody's money and promise them things that they cannot deliver. If they actually had this money to back it, the way I showed you before, how to structure somebody, how to guarantee something, they could have guaranteed returns. It would not be 1% a day. It might have been like maybe 10% a year. And they're able to sustain it.
Things were moving so fast, they couldn't do that, bro. Things were moving so fast.
No. They set things up to move fast because of the returns that they guaranteed. So everybody jumped on it, and they couldn't fulfill those guarantees.
Exactly.
So no, but you're missing the point here. But it could have been structured in a way where it could have been over 10% and still been fine. But with 1% a day, do you know what 1% a day compounded is for a whole year?
How much?
You know? I'm asking. Do you know?
Yeah, it's about 3,000 plus return on investment.
Exactly, which is astronomical. So my point is, it could have been over 10% though. It could have been. No, I didn't make anything. So I don't know what you're celebrating for. I do not know what you're celebrating for. My point is, they could have guaranteed 12% easily, which is way over your 5% threshold. And you'll be like, "Oh no, don't invest in this." But it will have been over it, and it will have been guaranteed, and it will have been fine. but they went too crazy with it.
Well,
And
we were talking about aggressive.
that's
We were talking about aggressive promotion of return on investment.
you keep adding more and more to this context. Before it's 5%, 10%. That is aggressive. Then it's T-bills.
No,
Keep building more and more into this.
You were saying something earlier. We got to use common sense. Everybody thinks they're using common sense. That's one. Okay. That everybody. Everybody thinks they are. Okay. And I wanted to bring the point out of that. Okay. So when I put that blanket statement, I'm being serious now. When I put that blanket statement, I'm also hoping that somebody will use what I assumed to be a common sense to themselves in context.
Sure.
Okay?
So
we
all know that's not what you were saying, and that's why I made it very clear.
You know exactly, and you wanted to make it clear, right? You wanted to make it clear
because at first you said all investments, and now I don't think I really thought about it. I don't think you thought it through all the way. And as I started to reveal things that counter that statement, you started to say, okay, you know what? There's some exceptions. But initially, when you made that statement, you thought that was a statement. I was like, nah, bro. There are other exceptions to that stuff. You can't just say that statement.
Yes.
Like that.
So and when we started this stream, and
you didn't think it through. That's all.
And when we started this stream, I said there's exception to every rule. Somebody is saying something here that I want to see if I can read out. He said the financial system is being disrupted. You know who answered to things when the financial system is being disrupted? FCC, FTC, and SEC. They want to know, and they are willing to look for things to shut down. They don't mind, and they could be wrong. But it doesn't matter. They will still shut you down, and that's really where I'm coming from. I wasn't talking wrong and right. I'm talking about people protecting yourself, protecting your money, because SEC will come in and shut the shit off. It won't matter. Okay, it will be done. It will be done deal. And they will say, oh yeah, you just look funny, and they will find one excuse. Maybe somebody put they misrepresented in one paper, and that's it. And that's the end of it. It happens all the time. Okay.
The point I want everyone to take from this debate at the end of the day is, if you see a guaranteed return, do not run. Do not run away. Investigate. Look into it more and see how it's guaranteed.
I have a different.
That's my point. And that was a debate. And that's my point.
Don't and I have a question for you on that.
Hold on. Investigate and take it from there.
I have a question for you on that. Okay. There are about 1,500 listed coins or tokens on CoinMarketCap, right? And I see this one that guarantees me 10% return on my investments. That's my number, right? And they guaranteed, right? And I have 1,500 different coins to look at. Bro, I am not looking further. I'm going to the other coins to go see what else I can buy out here that makes a little bit more sense. I got too many choices. What do you have to say about that? Again, choices, options. I got options.
I'll tell you what I have to say, right? First off, no coin on CoinMarketCap would guarantee you 10% return on the coin itself. They'll guarantee you 10% on the lending platform, right? So now what I have to say about that is, I'll look at a lending platform. I'll look at what kind of structure do they use? What kind of time frame do they use? Could I withdraw with every withdrawal fees? With DAV recently implemented, for example, DAV, so that people were scared of DAV too, like BitConnect. So what they implemented is that, hey, at any point in time, if you want to withdraw your money, you can withdraw your money. How can you say no to that? Even if you withdraw your money, they might give you a little penalty fee, but you're still going to make money. So that is very instrumental. That has a big difference between DAV and BitConnect and other lending platforms out here. If a lending platform says they could pull out your money whenever you want to pull out your money and you're not locked in forever, that's a good sign, because they're saying, hey, if you want to take your money out, take your money out.
They won't say that, bro. They won't say that. That would be automatic red flag. That's too easy.
Well, that's too easy. I'm telling you that they sent out an email. I received the email. People put in the chat room. They sent out an email that if you want to pull your money out with the new DAV platform,
I'm saying
pull your money
there's no platform that will say you don't indefinitely. You can't pull your money out. There's no platform.
Not indefinitely, but the general thing that all platforms do. And as a matter of fact, most real investment vehicles, like the real institutions,
let me read this.
They usually have a time frame. They usually have a time frame, like a year or 3 months.
Let me read this. Let me read this to you. Okay.
Hold on. So generally, they do lock you in.
Let me read this to you, okay? And I want to make certain statements here, okay, for the people that are listening, just at least they can know. I am Laurel Cujo. Thank you for plugging it. It says financial technology and its services are very diverse because of the present need of the shoulders of the society. Let's understand the present financial system first before diving into the cryptocurrency. That's a good point. There are actually six streams of income on the cryptocurrency space, and one of the main reasons politics get to go against the disruption is simple: because cartels are actually being infringed. You can run a decentralized system as a centralized one. If that's the case, there will not be any reason for a change or disruption. All right, great. Granted, let me just say something. He's talking about, I wanted to bring out the income stream stuff. Okay, BitConnect, the way they were planning to sustain that thing was they pay a chunk of money out when people dump money in referral fees for being an affiliate. That was how they were hoping at least that it will run a little longer. They always do that, okay? In the network marketing space, okay? They do that. They will do a referral. Coinbase does that too. The only thing is that Coinbase does it on a personal one-to-one basis. Coinbase will give you a link. I'll give you $10 in Bitcoins if you refer somebody that ends up buying $100 worth of Bitcoin. That means a sale was created before they actually give any kind of money out. Any platform that's giving money out from people using the joint fee, right? The joint fee, and they're paying commission out of a joint fee is a red flag, okay? And we can argue and say if it's right or wrong. It's not a matter of right and wrong. I'm saying that the FTC is going to come in eventually once there's enough noise around the platform, because people are going to make that noise, right? Affiliates are going to be excited and they're going to paste stuff all over the place on YouTube. And what's going to end up happening is that they're going to shut it off. Instagram, we're going to be gone in 24 seconds. If you want to join us, go to the Money Room on YouTube. Just search for the Money Room on YouTube when this ends.
Now you're making more sense. Now you're making more sense. You talk about red flags now, and now you're coming up to where I was from the jump, and that is
right.
Look at it in more detail. Are there any red flags? What are the pros?
But here's the thing.
Don't rule it out. Don't rule it out. And the point I'm trying to make is
no, you're correct. You're correct.
Just because it's 10%, don't dismiss it because it's guaranteed. Because you might go on and invest in something else in Coinbase that's not guaranteed, and you lose all your freaking money anyway. And they be like, guess what? I didn't guarantee you shit. Goodbye. You know.
Yeah, but the point I was making to you is like this guy pretty much came on TV. This lady evangelist said people are gullible, right? Because they believe whatever they want to believe. As a person standing on the platform on the pedestal, you can't really say that to the people. It's just not right coming from a leader. And the corresponding thing between those two things is this, right? When BitConnect comes into the marketplace and makes such a buzz about the returns and people put out testimonials and stuff, people are not stupid, but people are also emotional beings. And I'm simply just telling you the empathy there from me for them, okay? And people start operating, and we see it in our own Money Room. People are acting off of emotions, buying stuff and selling stuff, and we're human beings. So you got to position yourself so that your emotions don't do the dictation for you here. So when people get into a zone where everybody's talking about returns on investment, it's only natural for another human to say, yeah, I see the red flag here, but maybe I can make a quick killer before I get out here. People say that all the time. Absolutely. There was one guy on Ty Lopez's show who actually said, I have some money in it. It could be a Ponzi scheme. People do that all the time in the network marketing world. They can see they did that during the Zik rewards. They see that this could be there's a lot of red flag on this, but I'm gonna keep going until
I'll tell you this. There's actually a token or something. There's actually a Ponzi scheme, and they call themselves the Ponzi scheme. I forget the exact details, but they told everybody, hey guys, this is a Ponzi scheme. You can join in. This is an open Ponzi scheme. And people joined the Ponzi scheme, and they continued to Ponzi. Then when it crashed, people started complaining about the Ponzi scheme. But guess what? These guys told you it's a fucking Ponzi scheme, right? So my point is, even if idiot or you're stupid is written on
the person that joined,
people will still do it. Even if Ponzi scheme is written on it, people will still do it. So my point is, people just need to be smarter and put what they're willing to risk. That's what I'm trying to say.
The person that joined, right? The person that joined when they said we have Ponzi scheme and put it on their foreface, right? That's not the person I was talking about. I'm talking about the person that was in denial, right? I'm talking about the person that honestly they may not even see the red flag.
No, my point is some of them are the same people. A lot of them are the same people. At the end of the day, I think that these are people who are looking for money quickly and whatever, and it's a Ponzi scheme, and they still join. And when a Ponzi scheme, when it crashed, they complain about it. So I didn't.
Of course. But there's a mass. There's every time there's a new MLM that came on the scene. It happens in this country all the time, not just Nigeria MMM. Okay, every time there's a new one come on the scene, there's the mass. Okay, not the people that have been in every single one that come out, right? I know what the mass that sound too good to be true, but they also this testimonial, and they just put their money in, and they put a little bit in. Eventually, they get lured into putting more. Yeah, the more you do, the better. I hear all the time because a lot of my customers pretty much are in that world. So I hear it all the time, and There's only one thing I have to say to everybody. There must be a product that's for sale. The only thing that's defining all of this right now, like cryptocurrency world, right? People say, why are you putting money in stuff that doesn't look like? We talked about this last week, remember? We said there must be some kind of utility functionality behind whatever the vehicle you really want to believe in when we did the top 10, right? That's that thing when we said there's got to be a real product. There's a real product, and that there should be no money being distributed as capital gain unless products exchange hands.
Let me ask you this. Let me ask you this. And it's the same thing. We're saying, oh, people see it, they get emotional. They look at it, and there's the more money you put, they decide to put money and they join.
Right.
It's the same thing for everything. It's the same for everything. Even cryptocurrency. Initially, you were not in cryptocurrency, were you? But eventually, you saw the returns. You saw things that was going on.
It wasn't returns.
Hold on.
I didn't join returns.
Hold on. You decided to put what you could risk. You put money in there, and then you put money out of your pocket and you put it in cryptocurrency. So that's my point. You didn't do that before.
But your point is incomplete. Why? Why did I do that?
Hold on. My point is you did not do that before, but eventually you did. In other words, you're good. Why? It's called FOMO. You have fear of missing out. You're wrong. Yes. Because
can I redeem myself?
Because hold on. Because there are other places you can put your money too. You got to put your money too. Hold on. Cryptocurrency. We both agree that cryptocurrency, we see it as the future and whatnot. But at the end of the point is initially
that's not FOMO. That's fundamentals.
But at the end of the day, to me, it's the same thing. At the end of the day,
it's not.
What are fundamentals? Why didn't you go put your money in gold then? Or why didn't you go put your money in silver or copper or something else? But put it in cryptocurrency. Because this was the new thing and people are talking about it.
That's a question that you don't want me to answer.
Hold on, I'll let you answer, but I'm trying to make it very clear to you what my question is before you answer, so you know exactly where I'm coming from. Unlike you, I like to give people the context first, not as it goes along. Unlike you, I like to give people the context right away, all right? Yeah, so what I was saying is this. When it comes to cryptocurrency, initially, it was a new thing, and before you jump into anything new, just like people were jumping into Bitcoin and other stuff, you weigh your pros and your cons. You weigh the pros and cons. You look at it, you study it, you see how it's moving, you study it from a distance first. Then you put something in it, and you see how it goes, right? That's you get a feel for something. You study it first before you take that leap.
I didn't get in. Number one, I didn't get in. Number one, I didn't get in lump sum, which is my number one rule.
It's not about lump sum.
Number two. Okay, as I was coming in, I personally needed, because I'm still actually very much on the edge of the whole thing, but I believe fundamentally in the future of cryptocurrency and blockchains. Okay, that's the only reason why I kept going. Then keyword kept going. Okay,
that's my point. That's my point exactly. So my point is that that's very relatable to the whole thing of people watching BitConnect and they're like, oh, okay, it's a scheme. Should I go in? Whatever.
No, it's not.
At the same time, is this? You believe, right? There's an opinion that cryptocurrency is here to stay and whatnot, but you could be wrong too, right? You could be wrong, and it could crash tomorrow.
I don't think I'm wrong on this one.
Yeah, I don't think I'm wrong either. But my point is that things happen, right? And it could crash. So my point is,
and I said that. How many times have I said it's going to crash? This crash is going on right now.
Exactly.
Again, we got to stay on course here. Okay. I said this weeks ago. This baby can crash down to 5-6 grand. Didn't I say that?
I don't remember you saying that, but people
said it. I said it. Say yes, Daddy, you said it.
Chill, daddy shit.
But that's also based off of knowledge of history and understanding fundamentally the kind of game we're trying to play.
Chooks, I don't like when people say, I said, look, you're the same person that says it's going to go to $1 million. Not too long ago.
It may go to $1 million. I didn't say it's going to go to $1 million.
I said it like, no, like, come on.
I said it may go to $1 million. I didn't say it will.
When I call shit for real. The other day, it was 8 o'clock in the morning. I said to everybody, look, market's going to go down. What happened next? In a couple of minutes, we had the biggest drop the market has seen in the past 1 year in the stock market. So that's how you call it. No, say, oh, throw a whole bunch of darts and see what sticks. Nah, that's not what we're doing here. You call
anybody can go and check my track record of everything I've been saying. I've done about 5 or 6 on cryptocurrency. Anybody can go and check. Anybody.
No. You're missing my point here. My point here is the same way. Me and you were both outside the cryptocurrency world initially, compared to some other people were in there before us, right? And some people joined after us. But at the same time, while you're watching it, you studied till you got enough comfort within yourself to put something out there. The same way for people who are on those lending platforms, even though they might be stupid to put their life savings, I still say they're stupid for doing that. That's stupid. Is guess what? It might even be greed or whatever. But I don't know what
this is. All greed. We're all greedy. What are you talking about?
No. But my point is to put all your eggs in one basket is not smart.
Oh, okay, yeah, of course not.
So So they should have you know.
Yeah, I mean that's gambling
should figure that out.
101. That's gambling 101. And from fundamentally, I believe in the income you create from providing services to people is the best money you're gonna make, and is the most sustainable money. When you sell products and services to people, is the most sustainable money you're going to ever make.
Well,
Now,
I'll tell you this: when you're right, you're right. When you're wrong, you're wrong. They could have made they could have made a killing too. Warren Buffett actually said the opposite. Warren Buffett, I think he says, put all your eggs in one basket, and that way when you hit, you fucking hit and you're set.
No. He said something else after put all your eggs in one basket. He said something else.
But my point is, the reason why he's saying that is that when you hit in that case, you know, you hit big.
No. You got to finish that statement, man. Put all your eggs in one basket and
you finish it then if you want to finish it.
Watch the goddamn basket. Watch the goddamn basket.
Okay, you know what happened?
It is. It's not just the eggs in one basket.
And do you know what happened? They watch BitConnect, and they watch it drop. There's nothing they can do about it.
I don't know if you're going to agree with this, but here's my opinion on this. BitConnect pretty much used the biggest emotion of mankind, fear. Bottom line, nobody was looking at BitConnect and say, "Oh, this product is going to help us change our diapers in the future." Nobody was doing that. Okay, people were doing it strictly because of the return on investment on their money.
That's not fair. That's not fair, and that's what I said before. That's greed.
I'm not trying to. You said that's not fair.
He said it was driven by fear. It wasn't driven by fear. People put their money in there because of fear.
No, I'm talking about the seller. The seller, of course, the people buying are using greed. They're greedy. I'm talking about the people that sold that to them. They tap into people's fear, the FOMO you talked about earlier. That's what they tapped into, and that's why the thing was $300 at one point, right? Per coin, right? It was, and it crashed all the way to $20. Okay. On the other side, we're saying the same thing. On the other side of greed is fear. Okay. On the other side, okay. Essentially, so that's different from how I came into the game. I came into the game and said, wait, if you don't have a product to sell me here, this is a Ponzi scheme. And essentially, they sold me blockchain and cryptocurrency technology into the future. That's the product as far as I'm concerned. Okay. Now, do I understand everything about the technology? No. Just the same way I don't understand everything that works in this phone. Okay. That's the way I look at it. Okay. But I do know that people are frowning at traditional currency as it used to be. And then the moment I heard, wait, people can build apps for all of that kind of apps on this thing, then I'm thinking what we said in the last video or the two videos ago about utility and things. I'm like, okay, it makes sense. Fundamentally, this is the future. However, we're going to be going slow. Okay, we're going to be dollar cost average thing, which is the only thing I preach ever when it comes to this game. Okay, that's why I laugh when people say, oh, I lost money. Oh, I'm gonna play the game, make it fast. I know people that put money in that thing and they put it in when it was 19 grand. And it hasn't been back there since. Now, we could say it's going to go back there, but the brain doesn't work that way. Okay? Yes, you're right. It may go back there, it may go to $1 million, but your brain is a human brain. It doesn't work that way. It doesn't know that. It doesn't know the difference between yes and no. The brain has feelings and it's going to operate accordingly. And that's why you say, people, I need to pull my money now. I need to pull my money out now. And when people did that one time with BCC, BitConnect, it crashed all the way to $20. And it's probably lower right now, right?
Right now, like $9. But at the end of the day, you know, hindsight is 20/20. We don't know where it's going really. So people who are crying out, like say for example, some people when Bitcoin first came out, if you look at the charts, it started off low, it went up, and it came all the way down. People who sold when it came down, guess what happened now? They regret that shit because right now it's still way higher than it ever was compared to then. So at the end of the day, hindsight is.
But based on experience, you know what they sold.
We know where we are right now, huh?
But fear. Based on exactly, and you can have some empathy for that. Doesn't mean they're right. It's not right and wrong issue. It's just understanding how humans work. It's when you understand that, actually, you put yourself in a better position to understand how the market reacts to things.
It's not like you don't understand. Obviously, I understand. You understand why they did it, but does that mean it was the right move to make? You know what I'm saying?
It's not right and wrong. It's wrong for their pocket.
Exactly. So no, it's not the right move for them to have made. Is that a move that you ever wanted to make? So that's my point.
Right. But I'm telling you now, 5 years from now, I want to have this conversation with you. You're going to be able to see this from afar. 5 years from now, I promise you, I guarantee you, you can see shit like BitConnect and USI Tech and Zik Rewards from afar. 5 years from now, 10 years from now, you're going to be able to see them from afar without shining your eye, without needing to waste the time to shine your eye. You can just see it. Not only see it, sometimes you can even feel it. That's when somebody said superstition here earlier, right? You said wishy-washy because I went from 5 to 10 because I told you it's not always a
Yeah,
science.
yeah.
It's not always a science. There's a heart to
No,
it.
no. You missed me there. Like you said, oh yeah, engineer, I'm looking for a number. I'm not necessarily looking for a number. What I wanted you to say is what I said, and what I said was look at everything on a case by case basis. Don't say 5%. Don't say 10%.
Well, we have 3 cases, so we have 2 cases.
No. When I say case by case, I mean if there's someone that's promised you an investment and a guarantee, look into that guarantee and look at the nitty gritty. How are they doing it? If they're not telling you, then that's something to watch out for. If they're telling you,
I'm gonna make a call.
So
right
that's my point. That's my point.
Is Dav doing they have a lending platform, of course, right?
Yeah, they have a lending platform.
Do they send out money on affiliate commissions when people join and they buy stuff? Like you can build a team there?
Yeah, not a team, but you could referral stuff.
Refer people and you continue to get paid from their production and stuff, right?
You don't continue to get paid like one time, like Coinbase. You know what I'm saying? Like that.
Like a referral for Coinbase one time, right?
Yeah.
That may save them, but the whole idea of lending thing, I'm gonna make the call.
You're about to make a call. Finish that call.
Yeah, I'm gonna make the call right now.
You change your mind.
Please, today is my brother's birthday. February.
Tooks, don't do it. I know we're having a heated debate here, but it's not an argument. Don't get emotional involved with our debate.
I want this to be clear.
Don't get emotionally involved and say something you're gonna regret.
Today is my brother's birthday. So on his birthday in 2019, you need to call me on it, okay? If I'm wrong or not. Dav will not be around 1 year from now. I'm picking on it specifically because I've seen you guys throw it back and forth. It's not gonna be around. For the obvious reasons, okay? It's just not sustainable. Point blank, period. How much do they guarantee per day?
Go check it out, man.
Yeah, it's not sustainable.
It depends. But look.
And it's not only math. Sorry, it's not only math. Math is not the only reason why it's not sustainable, okay? There's also something called slippage when numbers get bigger. Okay?
I'll tell you this. That does not guarantee. That's what I think people want to group all of them in the same bucket. And I'm not saying that Dav is going to fail or is not going to fail. Who knows what's going to happen? Well, they don't guarantee. They tell you what you can expect. Right. Expected return is something that every investor should be able to give someone. This is what you can expect. And they give you what,
great.
They give you what you expect.
Great.
And they don't guarantee that this is what you're going to. But sometimes they beat that expectation. Sometimes they come under the expectation. But they give what you expect.
It's really in the long run. It's going to be about 1 year from now. And another thing that FCC does is this. FCC doesn't wait to use the word guarantee, by the way. They don't wait. All they have to say is, we just need a few people complain that we thought. They have to use the word with. They're evil. These people are evil. I'm trying to get you to understand the kind of animals that agency is, right? When they're not waiting for you to use guarantee so I can say, yes, you use guarantee, we're gonna nail you. No. They just want a few people to complain. They're gonna take you to court, and somebody's gonna make a career out of shutting down the company.
And I'm happy. And I'm happy you said they don't wait for guarantee, because I don't know why that came up. Because guaranteed is not a thing that people.
Oh, it's the extreme of it. That's why.
No, I'm not saying
it means it's guaranteed to shut down.
I'm not saying that. That's wrong. I'm saying guarantee is not a word that FCC or people here and say, regulatory.
It's not just guaranteed. It's guaranteed claims. It's guaranteed claims.
They don't hear guarantee and come for things. It depends on how it is guaranteed.
Oh, but that's why they go to court. They're not just going to shut you down. They'll shut you down first, then they'll go to court and determine if you want to open you back up again.
They'll investigate first and see if that guarantee makes sense. No. Because they're wasting their money.
No. They cease and desist. They shut you down first, and then we figure out if we want to reopen you later. These things are evil. I don't know if you understand what I'm trying to say. That's why Facebook, you put an ad out there on Facebook and you put a guaranteed claim in it, something that say, hey, it doesn't have to say guarantee. It just has to say you're going to lose 20 pounds in 4 days. That's all it needs to say. Okay. Facebook is going to say, we do not accept guaranteed claims. It doesn't have to have the word in it. You just have to pretty much say it in a statement like that. You're going to lose 4 pounds in 4 days. We're not going to take that ad. You have to reword your ad. Why do
I haven't run into that yet, so I don't know. But
why would Facebook? What
I can tell you though is that you see it all the time, in many different ways. We say, "Oh, guaranteed, or your money back. Lose 10 pounds, or your money back. Guaranteed, or your money back." So they guarantee you something, and if not, they do something. So guarantee is used very often throughout the business world, all the time.
Well, here's the thing: you have to wait.
You have to wait
until enough people complain. about they didn't get what was promised. Okay,
but guess what? But that's why
it needs enough buzz around it,
and that's why you make a guarantee within reason. You're not gonna make a stupid guarantee. If you see that most of your customers lose 50 pounds, you can sell them 10 pounds of your money back because you know that 10 pounds is very highly unlikely, and you know that whatever refunds you're going to give people, it might be only 2% of your revenue. So if you're only refunding 2% of your revenue, you're making an 8% of your revenue. Who gives a shit? So those are the calculations that companies.
I'll tell you who give a shit.
I'll tell you who doesn't give a shit though. I'll tell you who doesn't give a shit. The company who is making the money, 98% doesn't give a shit.
Well, let me give you.
That's what I'm going with.
Let me give you a couple of people who give a shit, and then we're gonna round it off. Okay. Facebook, Google, any network where major network where you set up ads, they do. SEC, FCC, FTC, they give a shit, and it's not just those names; it's agents that want to make a career out of shutting your business off. Okay, it's just like the criminal world. That's how it works. There's a bunch of people sitting in the office looking for the next person to shut down. This is bigger than me and you's argument. Bottom line, it happens every single day. And I'm going to give you the last word. I'm done.
Yeah, that's fine. No, I'll give you the last one. I feel bad for you. I destroyed you in the last one, and I'm destroying you again today. So I'll let you have the last word. But my last word is this: if you see something guaranteed, don't run away. Investigate further. And the word guaranteed is not something to be scared of. It is used all the time in businesses, right? All the time in different businesses, they guarantee you stuff or your money back. And maybe once in a while things go wrong for them, but they don't give a shit because they know that. Say for example, out of 100 customers, one person says, "Hey, it did not work for me. I want my money back." They'll gladly give that customer that money back because guess what? They got 99 other customers who.
That's not a guarantee claim.
So you have hold on. That's my last word. So it's a model. And that's what companies go by. If they know they're going to make more revenue that they're going to lose, then they'll be glad to do it. So that's that.
All right, cool. All right, man. It was a nice conversation. Hopefully, people take a lot away from it. At least people can shine their eyes and open up and see in the future, man. All right, peace.
Peace.
Hey, don't forget to follow us on social media. Follow me, iTalksB, and my friend Nam Dizu, right? Diesel. So go follow us on and if you have any additional you want to add on contribution, questions, anything like that, just drop it in the comment below and give us a thumbs up and
comment below.
Your friends. Thank you very much.
Let us know who you agree with. Do you agree that with me or do you agree with this guy? I think it's pretty obvious who you should agree with. It's pretty obvious because I'm trying to help you make money. I'm trying to help you make money and not run away from money.
I'm trying to help you not lose money. How about that? Watch your baskets.
Let's see what they say. But good one though. Good one.
All right, man. Later. Yeah.
Peace.